Well, hi and welcome back to another training video. This is on the E-mini futures, and I'm doing this because yesterday I posted a video and a gentleman on there asked me if I would present one or show one on a E-mini chart. So here we are, catching right up with that. So let's get over on the chart straight away and have a look. Hi, just before we get to today's training video, I want to give you a quick sneak preview inside the training area so you can see what you get and you know all the lessons are there and how to use the indicator and really get you up to speed rapid. So when you log in, you've got all these lessons down the side here, right from setting up the chart, putting the indicator on the panels, indicator first use, and then we get into some live trading with it so you can see what's going on there. And I put these up pretty much 2 or 3 times a week, these videos go in here to build up your training for you. Anyway, that's just a quick look at what you get inside. Once you're inside, let's get back onto today's training. So I'm going to go through, and like I normally do, I'm going to get a marker on here so I can guide you through all this. And I'm going to give a quick recap of what we're doing here. So we've got a recap here. So here's the pressure points here. These are our key points that we're paying attention to. This is in the PAT indicator. You see up here. If you want to know more about this, then check the link in the video below. Or if this is in your training area, obviously you won't have a link below. Okay, so what are we doing? We're looking for pressure points, and we're looking to see where the pressure points are going with the trend and when they're going against the trend. We're looking for pressure points to trade with them, and we're also looking for pressure points when they fail. And a failed pressure point, to recap, is when a pressure point is either pushing down or pushing up, but it actually breaks. So the pressure is released from that. And that's where we got a greater distance, generally speaking, of greater distance of moves. So let's get into it and have a look at what we're talking about. One other thing before I get onto this is very important, is that if you've been trading for any degree of time, you'll know that it's very easy to make money in a trending market. But what's quite difficult is to make money in a sideways market. And what's more important is not only is it difficult, often what you'll find is that when you trade and make money in a trending market, you then carry on trading the next day and the next day, and you get back into a sideways moving market, and the money that you made in the trending market, you then lose in the sideways market. And on average, there's about 2 or 3 trending days in a week, average about 2. So that gives us about 3 non-trending days. So the odds are stacked against you if you're trying to trade every day, or certainly if you don't have an indicator that keeps you out of those sideways moving markets. In actual fact, I call those slightly different because those sideways markets are in fact an accumulation phase ready for the next profit release. But we'll get into that later on because it is fully explained in the training inside on the training course on this. Okay, so you can see at the bottom here, we have a pressure point pushing up. And the problem with this one, I say the problem with this one is that straight away we see we've got quite a flat area of the floating zone. Now this is the floating zone, these 3 dots you go here and the dots up here and the center lines. So just as a basic understanding there for you. Like I say, all this is in-depth explained in the training course, but I need to give a quick recap, obviously, if you haven't seen that before. So what we're looking to do is we're looking to use the pressure points to get in on very low risk, high probability trades. And what we see is we get this pressure point in the bottom. So what we're looking for now is there a trend that's going to confirm with this? And if there is there a point in which we can get in with a very low risk stop and great potential reward? So the first thing we do is we see this here, and then we get this top coming over here. Now, if this market had been trending up, we would get a buy order over here. Now, could we get a buy order here? This is the point. Because once we see this market come up like this and the market comes down here, we would naturally think, okay, well, I'm not going to put a buy in here because I can see that the dots are starting to come down. Therefore, we're not maintaining an uptrend. However, we say to ourselves, well, what would it take? So in other words, when the market goes over like this and comes back down here, we can see that the market starts to move back up through here. And we say, well, what would it take? Where would the market have to go to give us that upward moving trend? If we look at here, what we'd see is market comes up to here, and it doesn't until it gets to around here that it actually starts to 3 dots start to turn up, which is pretty much a definition I use as it's starting to turn the other way. And then the market gets into this move and then starts going up. So I think it's a little bit cherry picking to say, oh yeah, you could have got in there, because I don't think there was a nice rollover top there that we'd have got in onto there. Now the next thing we have is we have a pressure point onto the downside. Now the issue with this, of course, is selling, because if it was a selling one and this was going down, we'd be looking for an area like this to put our sell order under. But in this case, it's very clear that the trend is actually starting to go up. You can see where it's come from out of this area. It's starting to develop this uptrend, as shown to us by the dots elevating higher and higher. So what we'd want to do is put a buy order above this point where we see this roll over, as it were. And what we see is the market comes up, puts it there, and it rolls over, and that would actually take us into the market at this point here. Now, this wouldn't be a great trade, although it would actually go into the money, but the reason I'm not don't really like this trade is because we have these yellow blocks on here. And the yellow block is really an indication that there's extra activity, market maker activity has entered right at that point, most of the activity, and you can see the market is being pushed down as a result of that. It's against the trend. Doesn't mean to say the trend isn't still there. It is. It's the market maker activity of pushing it back down. But nevertheless, so what I would do is if I had been triggered into that trade here and I saw that coming in there, I would literally move the stop loss right up under there and take a few pips loss on the trade and move on ready for the next trade. Okay, next one we get is we see this down here and we've now got what? We've got a confirmed downtrend. So what we want to do here is we want to put a sell order under this point here. That trigger does not fire, we don't get taken into the market. Great, because obviously the market didn't go down. Then the market pretty much just messes around, does nothing. And notice that the market is fairly much trending down through here. And so it's not really nothing, there's nothing in there that's given us, there's no pressure points to kick us off, and there's no lows to take us into the market, etc., etc. Then what happens is we get a pressure point down here, but now look what's happened. We start to have an upward trend. This is a very interesting indeed, because now we have a pressure point down, but we have a upward trending market. This is highly likely to fail, and failure is where we get the biggest chance of success. So a buy order goes above here. As the market's coming down here, it goes above there. And now what we're doing is waiting for, they're looking at the trend on here. Is the trend continuing? Yes, 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 yes. We're then taken into the market, and away we go into the profit release. Important to note here at this point that this is outside the floating zone, and the further they are away from the center line, the more pressure is contained within them and the greater moves we get. And so away we go and into there. And so we'd be following our stop up here. And in this sort of case where we're going up, and then we can see the market gets back into an accumulation area. And you can see as the market is actually going up here, notice the yellow blocks that are appearing up here. This is signaling this pressure to sort of cap this off, if you like. And that's shown by here, and then the market goes back into an accumulation phase. Now what we're looking for is the next trade. So pressure point pops up, we see it here, so we're going to look straight away at our trend. Where is our trend? Look up here. At the moment, it's not really confirmed down, not until later on, until it gets to around here. But what we do is we see the pressure point coming up, so we're now looking for a confirmed bottom area that we're looking like that, where we can get under, that's near our pressure point. And what do we see? We see this come down here, and there it is. There's our little upturn. We got a green and a red and a green, and we've got a little upturn under there. So that's where we want to sell if we have that confirmed downtrend. So when the time that market was filled, if you can see, we're about here, and clearly we have got a nice downward trend. And that takes us right bang into the market, great down for another move again. Notice again what happens when the market gets down here. We get the market makers gap in, which is almost like a break effect. It's a bit like a shocker effect. The market makers enter and the market starts to go up. Great time to move your stop right the way down, or actually close your profits off and take your profits out at that point. Following on to the next one. And you can see how this process is. You go all the way through and you're just following this process through. When you lose trades, you're using a very small stop loss, you're using limited losses, but when you get the larger breaks, obviously, then you're making a hell of a lot more. So moving on, we see this one here, and what do we got? We need a low point in this case to push this under if the market's going to continue on down. It doesn't, so we don't put a sell order under there. And then we have this one here, pressure point going up, and you can see we've just started going up, but also it's just started to come down a little bit here. So what we'd do is we would have a sell order under here, looking for a failure to then go down. Market doesn't go down, doesn't trigger us. Again, I hope you're realizing the power of this, because it's not getting you into weak trading positions, and you're not suffering losses, needless losses, when markets aren't going where you expect them to be going. Okay, and then so we see this, and then the market starts to trend up, and then what do we see? We have a pressure point down, but this time we've got a confirmed uptrend. So what we're looking for is that top hump there where we can get in. So we look here, and what do we see? We see up, we see down, we see up. So we can enter the market back into here. Already we're starting to get some market maker activity. Nevertheless, the market does go on and carry on up. Can't answer what would happen here. This is a volatile bit of period through here. So it is what it is at the time. You deal with it at the time. And likely my interpretation of that is that you would probably get out break even, or you'd lose a few pips on that trade because of the volatility. Next one we have here. This is a very interesting proposition here, because we have a confirmed uptrend. And we'd have a buy order above here. That would take us in. and immediately we'd go into the market and we'd see another pressure point on here, and we've already got a turn off there. We're going to close that trade off, and we're going to see what happens as a result of that. So I'm not going to carry on now, because I think you can actually go through this yourself and you can work this out. Notice when we're close into the center line here, it gets into the accumulation area. These are trades that you simply do not take, because the likelihood of movement when the pressure point is close into the line is minimal onto there. And I'll let you work this one out here. I won't say too much about this. Let's have a look. This is the final one we're doing here. So it's on the extremity. We have a down. We have a low here. We even have a low here and a failure. But maybe you can go through that and talk yourself through that. Well, there we go. I hope that helps and you enjoyed that one. I'll get this up into the training area as well, and I'll catch up with you very soon on the next video. Take care. Have a wonderful day.